Okay, firstly, very good afternoon to everybody, and thank you for joining us for today's WinPE Ignite Career Conversation. Today's topic of discussion is on a day as an investment analyst. I'm sure many of you all are familiar with WinPE. So WinPE is non-for-profit platform that focuses on gender diversity in the investing ecosystem while helping to create more opportunities for women in private equity. So before we start our session, a few housekeeping rules. Please keep all your mics off. In case you would like to share your video, you can do that. Please post your questions in the chat box. We will be sharing those questions, but I will try to cover them in the conversation. With that, I'll hand over to Trina, who is a part of our WinPE team, to introduce all the panelists. Over to you, Trina.
Thanks, Megha. Thanks for the introduction. So it gives me immense pleasure to welcome our panelists, and they will be guiding you through the entire session and sharing their journey with all of you. So I will start. Our first panelist is Ishita Suri. She's an analyst with Amicus Capital. Amicus Capital is a high growth and mid-market firm. Prior to joining Amicus Capital, Ishita worked with JP Morgan for over a period of 3 years and with the Financial Institutions Group as an investment banking analyst. Our next panelist is Puja Parmar. She's a senior analyst with Equanimity Investments. Equanimity Investments is a to Equanimity, Puja has worked with housing.com as a finance business partner and has led the product, tech, and design team. Then we have the moderator for today, that is Puja Shroff. She's a senior associate with the KPMG India. Puja Shroff is a senior associate with the SSG team of KPMG India, and she has previously worked with EY, focusing on M&A advisory and financial services sector. Then we have Shikha Parekh. Shikha, a global investment firm. Shikha specializes in credit and special situations, team with KKR. Then we have Shreya Bahol. Shreya Bahol is an investment analyst with IFC. Shreya Bahol has a background in economics and finance, and she has always been passionate about working in the impact space. Her current work entails focusing on investments that promote access to finance, clean and green energy, and women-owned businesses. And our last panelist for today is Vidhi Doshi. She's an investment analyst with Eximus Ventures, that is a micro VC. Vidhi has over 4+ years of experience in the investment space, where she has helped identify, support, and scale businesses across angel syndicate and private equity firms. So with the power-packed team of panelists here, I hand over Puja to continue the session. Thank you.
Thanks, Trina. Thanks, Megha. Looking forward to this session and hearing all the insights from our amazing panelists here. Before we start, just wanted to also mention that a few lucky women in the audience today will get a chance to interact one-on-one with a leader from the investment industry. So we have Arvind Krishnan, who's a principal private equity at Blackstone, Sandeep Nayak, the managing director at General Atlantic, and Satish Chandar, he's a partner at True North. So definitely stay tuned for the lucky draw that will happen during the session. Let me start off with the questions. My first thing that I wanted to understand from you ladies was, how did you even decide to get into the investment space? And then, of course, what preparation did you do for it? Shreya, would you like to start us off?
Hi, Puja. Thanks for the question. I think it's a good one on everyone's mind. So I began my investment journey or my journey into finance through my recruitment. I was lucky enough to be recruited by Nomura into the investment banking division. When I joined investment banking, I had very limited financial expertise. So my first pinpoint became, trying to get those expertise and trying to understand financial models. So what I used to do was I signed up for some online courses and I, started building my own financial models over the weekend just to gain some insight into that. Journey into IFC was a natural transition because I started missing my background, which was in development finance. So I wanted to do something which combined the best of the two worlds. So that's when I started looking out at firms who were into impact investing and things like that. So one of the key things which I personally do before I interview for any firm or get shortlisted there is try to seek out people who are doing similar jobs in the organization and try to connect with them to understand what the interview processes look like and prepare accordingly, because every firm has a different process and every process requires different preparation. So what I do is try to reach out to those people and get on a quick call with them, or just to understand from them what it takes, or what particular skill sets do I need to focus on or brush upon. So that's from me. Thanks.
Thanks, Shreya, for sharing your journey. Ishita, would love to hear your thoughts too.
Yeah, hi everyone. So I am an engineer. So when I started with my investment banking journey, I had no clue what I was getting into. So it was an internship for 6 months, and then eventually I got a PPO. And after that, it was, so the trick behind is that you cannot really prepare for everything when you get into such a space. So there is a lot of on hands learning that happens while you are doing the job. So I think one of the things that is most important is that you find a good mentor and learn everything that you can on the job. So that's how my IB journey progressed. So I did some mid office work, then I moved into the front office for JP Morgan, and I primarily did financial services there. So being on sell side for almost 3 years, I realized that while there is a learning curve, I had kind of maxed out there, and I wanted to switch to buy side because I felt that it would give me an opportunity to look at other sectors, and B, sort of really deep dive and get into sectors and companies which in IB kind of gets difficult because you're always running after a tagline. So just to prepare and for interview, so once I realized I wanted to make that switch, obviously there are 2-3 things that you have to quickly do, which is A, speak to some people in the PE space who have some sort of similar profile to you and see what they did. B, get into the consultants that are present, such as Mike Page or Native, because these are the guys who will be getting you the interviews. So you need to really be good with them, speak to them, explain where you are coming from, because these are the guys that will help you get those interviews and help you give you the inside track. So I think that's about it. And in terms of all the preparation, I mean, as Shreya said, it's kind of dependent on what you are applying for, but I think one of the major things that I learned was that whatever you put in your resume in terms of your deals, such as if you've worked on something, whether it be a life project, like whatever you put in your resume, it needs to be on your fingers. Like everything, every number, anything could be tested. So I think that is the most vital preparation that you can do. So I think I'll just let other people tell you, because I have a lot, but yeah, I think this is one of the major things. Yeah.
Thanks, Ishita. Those are some really good points. I'm sure everyone in the audience was hearing keenly. Next, we'll go to my namesake, Puja. Would you like to share your thoughts?
Sure, Puja, I'll do that. I started my journey working at a startup after clearing my chartered accountancy exam. I was working at housing.com in their finance team and also handling the investor relations part. The amount of work that used to go into preparing documents for investors or preparing for any meeting for investors was massive. And we used to get some tough questions from the investors that prepared us, of course. But this entire investor ecosystem is, got very intriguing for me at that point in time. And around the same time, I happened to attend a seminar where one of the angel investors was giving a talk. And I could really relate to what he was saying because I worked at a startup then, so I could really relate to it. I cold messaged him on LinkedIn and he replied. We met, he gave me some assignment to do on some research bit. I gave my best to it. I think he liked the research. So he said, why don't you evaluate companies for me that I want to invest as an angel investor. So it was, starting small, but I mean, it was good exposure for me. So I happily spent my weekends working on evaluating deals for angel investment. This went on for about 6 months freelance. I was doing this and I didn't know that this gentleman was starting his own fund when he did, and I was offered the job, and that's how I got into a VC.
Great, thanks, Puja. So cold messaging works, guys.
Yes.
Vidhi, let's go to you.
So for me, I started my journey like 5 years back, right outside after I graduated from college, like my undergrads. And it was something, you're just hunting for a job for getting that first internship. And that point of time, VC was still budding in Calcutta. So I joined this small boutique firm called Augment Ventures. It's like a family office. So my interview was very normal and very more on the behavioral aspect of it. So it was very easy for me to get in. But within 2 weeks, I realized that how much of easy that was. It was not a child's play, and I had to start putting in a lot of effort, like work during weekends, polishing yourself, like understanding basic things like MS Office was something which I had to start from scratch. So I think just for preparing interviews, it's not that you can just sit down one day and figure out that you want to join in the PE and the VC world. It's a day-to-day journey. You'll have to start polishing yourself, how you present to your in terms of interview, what all you mentioned in your resume, it's justified, it's not justified. So that is, I think, you keep on learning on a day-to-day basis, and be honest with yourself that, you have to understand if you're not good at Excel, you're not good at Excel. It doesn't matter if you're 5 years senior in the industry, you'll have to understand that and you'll have to work on it and make sure that you're up to date with that. So that I would say would be, to focus on those gaps.
Great, Vidhi. Last but definitely not the least, Shikha.
Hi, so I think for me, similar to like a lot of people, I started my career in investment banking. I'm a chartered accountant by training, so I think just for me, I would say it was a bit serendipitous to be able to find a position in IB front office. Like right when I started, typically people transition through other roles into this. So I think I networked my way into finding a year-long internship at UBS, and then I went on to work at BAML. And from there, I think it was a natural progression into investing. And I think pretty much everybody's made like really great points about the fact that you really need to study your deals, right? I think some of the things are going to stay standard regardless of where you're interviewing. Some of them are going to really differ. So like your basics of, financial accounting, some very neglected items, like how do you account for depreciation in your 3 statements, very stereotypical questions. And I've seen them at like funds of all shapes and sizes across the investing life cycle. So you got to be prepared with like the fundamentals of accounting. You need to be quick on your feet. So, as much as I can give you tips on what are good resources to study from, you will still have to like think through some of the things. And a lot of funds will like give you like situations or like on the spot case studies or something of that sort, like 5-10 minute walkthroughs of how would you look at an investment, aside from obviously being able to walk through your own transactions. So I would say like when you're studying your fundamentals, make sure you understand it well enough to be able to apply it in a real life context. And finally, I think just one last piece of advice is it's completely okay to have a viewpoint different from everybody else's. Just because I think that something makes a good investment doesn't necessarily mean that you have to agree with me. And I think as long as you're able to substantiate it with a good enough reason, I think most people appreciate that. So that's something I'd go with.
Thanks for the great tips, and thanks everyone for sharing your journey and any preparation tips for the ladies in the audience. So for the next question, I wanted to understand, so you've sort of cracked the interview, you've prepared well, you've got into the investing ecosystem. Now, how was the experience of yours in the first few weeks of joining? What kind of training, shadowing helped you out? Vidhi, would you like to share your insights on this?
Absolutely, So like I mentioned, my entry was quite easy. And within 2 weeks, I realized that this was not something like a piece of cake. To stay afloat, I needed a lot of guiding. And at the same time, I need to put a lot of work myself. So what mentoring and shadowing helped me was that my first manager was very direct, and he clearly told me that what exactly he wanted and how he wanted. He did help me with a lot of things like, where should I go for some research, what research needs to be done. But at the end of the day, he would just be guiding me. I would be the one who would actually have to put in that extra effort so that when there's a meeting tomorrow, I am up to date with that meeting. I know what needs to be done. So, that is the kind of mentoring and the shadowing which I got. And, 5 years and I'm in my third job. So I've been very lucky with my managers who are very, they understand that this needs to be done, or this needs, how it needs to be done. And they do understand sometimes that sometimes they are asking something which is not in my hands, or maybe I'm not very polished enough. So they do give me that much amount of time as well, that, you'll have to learn it no matter what, maybe now, later. So, they'll give me the time frame that, go ahead, work on that, but come back with something, or, work on this. So yeah, that way my mentorship has been really nice. But I think what needs to be done in terms of upskilling and everything is you will have to put in extra efforts, no matter how good your manager or your associate or someone above you is, because end of the day, it's you who are creating a brand value for your firm and as well as yourself.
Thanks, Vidhi. Shreya, love to hear your views.
Yeah, sure, Puja. So when I joined, I actually joined at a time when it was the busy season of the year. It was close to fiscal end for IFC, and you can imagine the kind of pressure on the targets being fulfilled and all that stuff. So what really helped me at that point was that I could not really shadow the entire deal process, but teams were at that time presenting to the investment committee. So I could attend those investment committee meetings and see what are the kind of questions and what are the kind of topics that investment committees tend to focus on, and what is expected out of me in the next IRM that I sit for or prepare for. So that kind of helped me to understand what is expected out of my role and what is the end value of my product which I give. So that was helpful. And the second thing was that contrary to what Vidhi said, a little different for my experience. My organization is huge. Everybody is super busy. So nobody tends to focus on you a lot. So you have to kind of navigate your way through the organization yourself. What helped me in the first few days was that, every time there was a task given, or if somebody would ask you if you're open to doing this task, I would always raise up my hand and say, yes, okay. Irrespective of the kind of work it was, even if I thought it's probably boring, it's grunt work, I would do it, because that kind of helped me to gain some credibility and some face time in front of my colleagues and my seniors. So basically they were like, okay, so this person is, so kind of helped me to build a rapport with my colleagues as well. So I think that's important. So it's important for you to, raise up your hand and say that, okay, fine, I'm going to do this. Even if it's outside of your comfort zone, take an attempt at it. I'm sure people around you would be happy to help you on that. So that's from me. Thanks.
Yeah, Shreya, I really like that point about taking initiative and being proactive and getting out there and getting the things that you want. Puja, would you like to share your thoughts on this as well?
Yeah, sure. So the initial weeks, or I can say even a few months, were honestly very overwhelming for me. While evaluating companies for angel investment was simple. I mean, when you actually get to a fund structure, it's not your own personal money, it's someone else's money that you're managing. There are various processes that you need to follow. The entire fund structure itself, to understand that, it took me some time, because there are a lot of regulations in place, various parties connected. and how you interact with the ecosystem. One more thing that was challenging for me, which I'm still learning, is getting out of your comfort zone to network with people across, be it your investment bankers or be it senior founders or be it just people who could, be even investors as well. So that entire thing was a process. Initially, there were some challenges that I faced in interacting with very senior founders, but my boss used to just push me in that direction. It's like, go and just do it. So I learned some nuances, like going prepared for any meeting, because initially few calls I used to get a bit lost, and because people were very senior and I had to question them, I had to get information from them, I had to maybe even say that, what you're doing is already being done by so many players, so I should even look at you like a competitive this landscape. So I think that confidence comes as you do more and more calls, and you just need to be a little more prepared every time you go for any meeting. I think that helps. And even networking, I think that kind of comes with the job, so you do become like better at it. So this was the initial some hiccups and the way I could kind of come over with it.
Thanks, Puja. Yeah, I think it's important also, sometimes when people are senior, you find it really tough to say what you want, even though, but I think you have to find a way to say it politely, because at the end of the day, it's for their benefit itself. So thanks for that. Anyone else of our panelists would like to share anything? Shikha, Ishita? Okay. Trina, are we ready for the lucky draw?
Hi, yes, we can go ahead with the lucky draw.
Okay, everyone. So we're going to have the first round of our lucky draw. So Trina will launch the wheel of names.
Okay.
And
This
let's see.
So starting?
Go for it. Nirabhi. Congratulations. We have another one as well, right?
Yeah. We'll just run it this also, and then maybe like Nirabhi and the other person can like show their video and just say yes, just acknowledge. Nirabhi and Shruti.
Congratulations, guys. Can you show your video so we can see?
Shruti M and Nirabhi. Yes.
Yeah, I'm
Hi,
here.
Shruti. Congratulations. And Nirabhi?
I'm here. Actually, I'm outside. That's why I'm not.
Okay, no problem. Congratulations.
Thank you.
Just stay tuned for more information on this by the end of the session. Okay, over to you.
Thanks.
Congratulations again. Let's move on to our next question for the panelists. So, you guys all have experience working on different kinds of deals. But typically, how big is your team? And then what is your specific role within that team, in terms of client interaction exposure or decision-making responsibility as well? Let's start with Shikha.
Yeah, hi. So thanks for that. I think in terms of a typical deal size, like my team is extremely small. So we are 7 people in total, and like 5 of them are seniors. So we only got like 2 junior hands in our team. On any transaction, it's typically you working alongside with a principal or a director, who's usually the deal team lead. And in terms of like client interaction and your responsibilities, I think it just depends on how far you're willing to go with it. At the very least, you're going to be running the model, you're going to be working on the investment committee deck, you'll be putting together some of your viewpoints. And typically the way my team works, and I'm quite grateful for that, is that the analyst or the associate tends to provide a screening level thing. So the way it works is I might get my hands on, say, a teaser or a presentation or like an IM or something of that sort on the model. I'll run some few analysis and we'll interview a few people in the industry, people, a couple of conversations with the management along with the lead on this. And I think it is your responsibility as the junior involved to make sure that it's worth the senior's time to really work on it. And I think from a portfolio side, I think you're quite used to interacting with the management of the portfolio teams, like making sure you get the MIS on time, just seeing whether the numbers are working right. Again, updating your committees as and when. I think there is as much or probably more interaction with clients as well as like diligence partners or for that matter, industry experts. And I'm quite thankful for that. It's the biggest draw. But I think you can choose to take a backseat on, I would say, some of the more, I think, top-heavy discussions, and I've seen some of my other colleagues do it. I think it's quite valuable to come in prepared, as Puja was saying, to some of these discussions, and given that you're usually expected to speak up. So yeah, I think it really depends on how much you're willing to pick up, but at the very least, this is what your typical job responsibilities look like.
Thanks, Shikha. Vidhi, is it different or is it similar? Let us know.
Yeah, it's more or less similar for me as well. So we are a very lean team. We are 4 people in the analyst associate level, and we have one manager, like who's the principal and the founder of the fund. So, since it's a lean team, a lot of decision making comes to us. Like the first call, whichever one we have, like getting hands, like what Shikha said, if we get on hands on a deck or something presentation, we have to run the analysis on that and have to have an opinion on that. What is our recommendation for the next steps? If it's a pass, you have to tell why is it a pass. So, and if it's if it was your partner's time, you have to justify that, why you think the startup is good, or maybe why it's not good compared to other competitors in the market. So yeah, the decision making is definitely there. Apart from that, we're a small fund, so our most of the time doesn't go, like we're still building a portfolio. So like, I think as and when we grow, more time will be dedicated towards portfolio. But currently, since speaking with founders and getting that, that is a bread and butter. So I think more time is spent on the client interactions, with talking to partners, industry experts, and it's always good to stay in touch with the industry experts and your FDD partners, LDD partners, because you'll be well connected. You want to keep the conversations going warm, as in, you don't reach out to them after 6 months for something and they might not be able to help you with that. So yeah, that's my typical, job description or day looks like.
Interesting. Shreya, we'll come to you.
Yeah, thanks. I think Shikha and Vidhi have covered most of the points. It's similar for us as well. Our client interaction begins at the business development stage or the post business development stage. Same for us. We get a number of proposals and then have a look at it, whether they are worth our seniors' time to explore, and whether one key important aspect for our proposals or projects is that we also have to evaluate whether they fit well with our long-term strategy of focusing on particular thematic pillars that IFC does within India. So that's another aspect that we look on, apart from the profitability or the value add. And another aspect is the value add that we would be able to provide to the client, or while establishing a new market per se for that product or an industry. So those are two things that we look at differently. And we do as well, just like Shikha, we do spend a lot of time on portfolio as well, interaction with the senior management on the portfolio to ensure that they are compliant with their quarterly reporting requirement. And if anything goes wrong, have a proactive discussion with them and intimate our committees accordingly as to what is happening. Since we look at the entire South Asia and not the Indian region itself, so we have to have a view and be read up upon the macro as well, what's happening in the economy. If a situation, for instance, Sri Lanka is facing right now, we have to be very proactive around that as well. So yeah, that's how the day looks like. Thank you.
Thanks, Shreya. Quite interesting. You have to sort of know what is happening when all the time. Let's move on to the next question. So, I know that we've heard people say that for an investment analyst, no 2 days are alike usually. But, if you ladies could broadly break down your typical day at work, that would be really helpful to people listening in the audience. Maybe we can start with Puja here.
Sure. So this is an interesting question. I had even written a post on a day in the life of a VC, but I'll reiterate some points. To anyone you'll ask, they'll tell you that no 2 days are alike, but a few things that one gets to do if you're working in this space is interacting with founders, evaluating pitch decks, then there is post-investment monitoring process that happens after you've invested. So overall, I would say you have to be pretty much a people person. If you are not, you'll become one, but you have to interact with a lot of stakeholders. So in a day, there would be some portion of my time that I'm doing research on any particular sector, and that we want to study the sector and look at deals in that sector. Then some portion I would be spending in post-investment monitoring in terms of evaluating the monthly information reports that come from the portfolio companies, studying the variance analysis, calling the founders, having arguments as to why your expenses have exceeded the budget, things like that. And when a deal is ongoing, if the deal is ongoing at that point in time, a lot of the time is spent into negotiations as well on the entire documentation piece. You have to, as an investor, there are certain rights that you would like to have. So right from some portion could be in evaluating pitch decks. Second portion, some part of the day would be in interacting with founders of portfolio companies. Some portion would be in doing those deals, either deep diligence yourself. So if I am doing diligence on any company, I would do multiple meetings with all the founders, also try to meet the team as to what their feedback is. I would interact with their competitors, try to evaluate what they think of this company. I would try to speak to their suppliers, do your financial modeling. Though in a startup, it's a little too much to say when you cannot draw a 5-year projection. I think 1 or 2 years is enough. If you can get accurate, it's amazing. But yeah, some portion in this entire deep dive diligence and some portion in the negotiations bit. So this entire gamut of all these things come under investment. Apart from this, because it's a fund structure, there are certain compliances that you need to do. So I do oversee some of those functions as well. And if you're in a fundraising mode, then you have to even pitch to a few HNIs, ultra HNIs, and family offices, distributors about your fund. So those are like more seasonal in nature, but otherwise most of your day will go into this investment gamut that I mentioned, all these points.
Thanks. So many things to do. But, Shikha, is your day any different?
Yes, broadly, I would say it is similar, but given that we invest across different deal life cycles, I mean, I think earlier stage funds have higher involvement with the founders and they have to do more competitive analysis. My work is a little bit different. Typically, I would say like at any given point in time, 50% of my time is spent on evaluating new transactions, and the remaining 50 is on existing portfolio companies. And I would say if that ratio is any different, it's usually because of where you are in your fundraising life cycle, right? Like for an older deployed fund, you will spend more time on portfolio, or in certain problem assets, you might have to spend more time. If you're a newer undeployed fund, then you consequently spend more time on evaluation of new transactions. I think when we are looking at new transactions, I think the bulk of my time is spent on probably the diligence part of it. So sure, the numbers are important. I do spend days, nights probably working to fine tune the numbers, but I think we get a lot of inputs through our due diligence processes. So speaking to people at the company, speaking to people in the industry that we consult as industry experts, talking to senior management across the fund, because we could have had previous investments at another geography which are similar. I think that would be on the newer side. On the portfolio side, it's again working with the management to understand if there's any kind of process that we're looking to do, if we're trying to structure our exits. I would say the only part where my interaction is a little bit lower is at this moment is probably on the structuring side. On the documentation side, the analysts get very, very hands-on. Yeah, so I think that's broadly how I would look at it. Thanks.
Great, thanks, Shikha. So like you mentioned about due diligence, I think we should just maybe go in depth into that as well. Wanted to understand from you ladies, what are the different due diligence practices that your team undertakes while evaluating any opportunity? And I know it can be different for different stages of the startup, but some practices that you could share. Ishita, would you start here?
Yeah, sure. I'll just kind of take you through the process when a deal comes to us. So we have something of a pipeline that we create and we go through it every week, on the basis of which the team sits together. And it's worth noting here that most investment teams are kind of lean. So there won't be more than 3 people, at least in my experience. One would be obviously your partner, then there would be like a mid-layer, and then it will be you, right? So it'll always be a lean team, but these kind of meetings with the complete investment team sort of help you decide which deal you want to take forward and which you don't. So certain criteria on which you can do preliminary elimination is on the basis of your investment thesis. So if there are certain sectors that you don't invest in, like for us, we don't invest in, companies that make alcohol or say, the real money gamings or things like that, right? So some of those deals just go out of the pipeline on the basis that they don't match the thesis. Then there are some. So since we are a growth capital fund, we would not ideally invest in companies that are slow growing. Right. And then there are obviously certain other criteria on which you can do some preliminary elimination. So if after that you decide to go ahead with a company, then there are certain steps involved. Usually you'll get, like a teaser. In certain other cases, you might get like a complete information memorandum or a model or something like that. So depending on the information that you have, either you take a call then or you go through a management meeting, which ideally means that you talk to the founders of the company, you understand the business. If you have some preliminary question on the basis of the information that they have shared, and then you, kind of understand the business a bit better, and then you go back to the company with certain other questions, clarifications, if you need some more data to analyze something, and so on and so forth, right? So this is kind of like the preliminary check that you do. So after the management meeting, the question and answers, the back and forth, if you do decide to go ahead with the deal, then there is obviously the term sheet stage, right? So once you give them an offer, all the term sheet is accepted, signed and everything, then you move on to the, the heavy due diligence. So even before doing the term sheet, certain things that you could, do, and most people would be doing, is doing industry calls with the customers. So for example, for most tech SaaS companies, enterprise SaaS, there would be, some sort of customer concentration that could happen. So you might want to check with the largest clients as to, what they think of the company, right? So these certain other checks that you do. In terms of the formalized due diligence, which you generally do after the term sheet, it will definitely always include your financial due diligence, your quality of earnings check, your tax, direct, indirect, obviously your legal DD on which you will do all sorts of things, plus labor compliances, everything you will be checking, right? So this mostly you will do for all companies. Then for us, given it's in our, mandate, it's what we have agreed with our, investors. So we'll also do anti-corruption DD. We'll also do some ESG DD. We'll do it internally or externally, depending on the level of, ESG impact the company could have. Mostly we will do both. Then obviously if it's a heavy, a tech heavy company with lot of, data, personal information, all of that. So obviously cyber security, information security, all those things, come into play. And obviously then you'll have to hire a third party to do all those checks as well. Also, we would, go through all the company's policies existing, and, we'll say where the gaps are, what needs to be revised. So all those checks will happen. And obviously all of this then combined, all our findings would go into the final investment committee memo, and we'll create checklists and timelines with each against each sort of gap that we find, and we'll try to fulfill it as and when the company becomes a portfolio company. And obviously then that's engagement for later. So essentially that's kind of the whole due diligence process that we follow. And I think it's important to note here that we are quite thorough with our due diligence. Like, we do probably more than what most growth capital venture early stage companies would be doing. But I guess that's the DNA of our fund. And obviously this can vary. So yeah, that's about
Thanks.
it.
Thanks, Ishita. That was quite detailed and quite informative.
Yeah.
Thanks. Shikha, would you like to add anything here?
Yeah, no, so I think that was fairly comprehensive, but I think I think if I had to summarize this, it's similar, right? Like, instead of conducting probably your ESG related screeners later in the process, we typically screen them out first. So it really would depend on where you apply some of those filters. Like, you decide what's an absolute no-go first, and then determine whether it's worth spending time on. And then depending on how any fund is structured, you may conduct industry calls first. So what we tend to do is talk to people that we may have worked with in the past to understand how credible the founders are for this particular company that we're looking to invest in. And then, I think decide, to do more work on it. And then I think, like Ishita covered, you would have your other set of due diligence experts coming in. So I think the only difference is like where you might have some of those experts and conversations and the structure. But yeah, you've got a screening phase, and you've got your term sheet phase, and you've got your post-term sheet advanced diligence phase where you appoint your diligence advisors from outside typically. I think one thing I would like to add is you may have a commercial diligence advisor, and this is essentially to see what kind of market share would this company command going forward. I think the likes of your Bain, BCGs, and I think some of the big fours do it too, just to see what kind of market share, how they are expected to grow, what kind of levers would you have from a growth standpoint. That's another diligence we tend to work with, aside from the ones that we already spoke about.
Okay, great. Thanks. Anyone else from our panelists would like to add here? Shreya, would you like to add something here?
Sure. So our due diligence works a little differently from what Shikha and Ishita just mentioned. So we, for us, we start with because we have experts from all over the world who join us for our due diligence process. So we start with we do a top-bottom analysis. So we start a top-down analysis where we speak about the macro, then we drill down a bit to the industry, and then look at the competitive landscape in the industry and who are the key players. And then we go down into the company and how what's its business model been like. We do not focus on very early stage because that's a different team within IFC which does that. So we focus on relatively established companies. So we look at how their business model has evolved over the years and what their financial performance is and other things. Then a couple of things that we tend to focus on are the management and what it looks like and what is their background and how successful have they been in implementing their early stage business plan. And the other thing that we tend to focus on is the corporate governance structure within the organization itself, what the board of directors look like, whether they are independent or not, and whether they have a diverse background or not. The other thing, like Ishita had mentioned, we also tend to focus on the AML, CFT part of things because we need to make sure that they are not in compliance, or they are not violating any UN sanctions, or are not in industries which are not permitted for us to invest in, for instance, tobacco or coal-related industries. And the last piece, which we tend to focus on a lot, is ENS-related issues. This takes up a significant proportion of our time, because we need to make sure that we are compliant with ENS requirements, and we're not investing in any companies which are engaged in displacement of people, or engaged in tobacco production or oil and gas. We tend to, even if we are investing in those organizations, we would try and work with them to reduce their exposure to such sectors as we make an investment with them. So that's a critical portion of our due diligence process.
Thanks, Shreya, for giving a different perspective on it. After this question, we're going to go to the Q&A round. So if anyone has any questions, please post them in the chat box, and we'll take it up after this last one that I'm going to ask. So I wanted to ask, how did you ladies upskill yourself, or keep upskilling yourself to contribute more to the firm? Ishita, would love to hear your thoughts.
Yeah, absolutely. So I have a lot of fun things to say here. So, typically when you apply for a PVC role, and I'm talking about, say, 90% of the population who enters such roles, you already have certain experiences, say in IB or in consulting, or some startup in like a corporate strategy or some sort of role, right? So you have certain about 2 years or 3 years of such experiences. And so when you are interviewing, they would have already screened you for certain basic requirements, like, are you able to build a 3-statement model? Do you have some basic understanding of accounting? And are you able to say, speak out your thoughts, give a valid sort of answers, kind of justify your opinion? So all those kind of things are already screened even before you enter a firm. So there is a certain level at which you already are there. So once you enter a P firm, you won't be, nobody will handhold you through everything. So there is a certain level of you can say confidence in you that you can handle certain aspects on your own. So now personally, I was in a bulge bracket investment banking role. So we generally used to look at large companies, established companies, listed companies, because that is the role of a bulge bracket. So when I entered into a mid-market growth capital fund, so I had to sort of rejig my thinking and understanding of businesses in a growth sort of an environment. So what I was looking for in, say, a company that was listed and large and established, I would not be looking at those same things in a growth capital company. So that is one thing, that your mindset needs to be adaptable to the kind of fund that you are going. So first things first is, I think, even before you apply or after you are there, you have to understand the thesis of the fund. You have to see where they invest in, what they look for, and you kind of have to work around and sort of have your own opinion about those things. So I think that is number one thing I would say. Right. And as soon as you enter into the fund, I would obviously suggest that, you read up on all the IC notes that they have prepared. You will probably be handed over some portfolio companies from the analyst who's probably leaving. You'll be taking over their workload. So all of their existing portfolio companies, all of that. So you need to understand everything about them, right? So from the investment thesis to the numbers to the people in the company to what you're expected to do. So all of those things you need to pick up. Then I think I don't know if it's similar for most of us, but probably as a sell side person or a consultant, you will have limited exposure to documentation and legal aspects of PE. So I think you'll need to kind of upskill yourself there, probably attend workshops. I know WinPE does a number of them, and there are other also happening. So read up on, you know, the documentation that the fund has done with other portfolios, and, you know, kind of, you know, get yourself comfortable, ask the people in the firm questions. Everybody usually, you know, is happy to help you out and answer. So when I entered Amicus, it was the height of the first wave of COVID. Everything was in lockdown, but I was lucky enough that they were going through a whole process. So I was, you know, lucky enough to kind of shadow with no expectation of me actually, you know, actively participating in the documentation, but shadowing helps. And, you know, then you can understand where, you know, what are the important aspects where, you know, negotiations will happen, and then you can sort of learn what is important, what is not important for your fund. So I think that's the second thing I would say. And I think the third thing, which I think a lot of us, you know, have a problem with, per se, this has always been my strength, but I know a lot of people have problems with it, is that you need to speak to people. You need to learn how to give your opinions. You need to learn how to, you know, sort of have a conversation where, you know, people challenge your opinions, you give your opinions, and have healthy discussions. So I think that is one way. So I am lucky in the sense that, you know, everyone in my sort of, we sit together once a week and we discuss a lot of things, right? So that gives you a chance to absorb what people are saying, and B, also give your opinions. And because of, you know, all that back and forth, you'll be able to learn a lot quicker than, say, any sort of book learning. So I would always suggest, you know, speak up, speak your mind, uh, talk to people. And I think fourth is, and this is obviously, you need to probably find like a mentor for yourself. So I think everyone needs for me, in my first firm, and it's a large firm, right? So it was difficult to find, you know, a mentor for yourself who would, you know, uh, really be behind you and push you. But I think in a smaller firm, such as, you know, a PEVC setting, you're able to find that person, and that person will be able to, you know, guide you, push you, and ultimately, you know, make you better. So I think that is one other thing that I would say, that if you can find that mentor, I think that would really help you, and, you know, it will fast track your learning and everything. So yeah, I think that's about it, and I'll leave it to the rest of the panelists.
Sure. Thanks, Ashita. I think, Vidhi, would you like to share your thoughts as well?
Sure, Puja. So I think the first and foremost, like, I would agree with Ashita, having that adapting to new things is something which I would agree on. Like, you should be aware who you're going to talk to. Like, say, suppose you're having a founder call, or if it's another stakeholder, be prepared for that. So, do your internal research, do the competitive analysis. If you're, say, suppose you're speaking to a founder, and if it's 1 hour call, make sure that 1 hour is utilized for the benefit of the founders as well as you. Right. So when you are presenting that way, the founder knows that you know your business. That creates a brand value for yourself and as well as the firm. So I think it's a very small thing, but researching and doing that bits and pieces before getting into any meeting and making sure that you're up to date with that. Or if it's some thinking which needs to be done for some portfolio company, like for me on a personal basis, I do it right after, before I start my day at office. So, at that point of time, you have a fresh mind. So that is when it helps me, rather than, if I just schedule it in the middle of the day, I cannot think it through with 10 things coming in my way. The second I would say is that, have a mentor, or maybe keep on identifying new things on a daily basis, weekly basis, that you have to touch point. Like, maybe I don't have a CA background, but you need to understand how to file things between an ROC, how to help startups. Those are minor things which needs to be identified, and you have to be aware. You might not have to go there and obviously file it, but if someone comes to you for a help, you should be able to do that. That's how you're going to be, street smart. And that edge is required. And lastly, again, networking is very important. Reaching out to people on LinkedIn, it's okay to, keep that fear aside and reaching out to your seniors, trying to stay in touch, because you will understand how those firms functions, how are they reacting to certain trends which is coming along, how are they seeing certain startups which are coming along in my field. So it gives you a fresh sense of perspective. So no matter where your comfort zone is, you might not be able to talk out in public or do that, but it is absolutely required to network and be out there, because that's how, it's a small ecosystem. You'll have to stay in touch so that you move forward.
Great. I think preparation is key, networking is key. Again, inviting questions. Let me see. I think Hetal has posted a question. So a fresher chartered accountant, if they want to go into venture capital, private equity, IB, equity research, then how do they go? And what skills do they need to develop? And what kind of recruitment happens? Yeah, Shikha, go ahead.
So, okay, sure. So I'm happy to speak to that. I think Hetal as first, I think one of the things you should try and figure out for yourself is like, where exactly are you trying to fit into this entire thing, right? I do understand your predicament that as a fresher CA, some of these opportunities will not be available, but VC differs from PE quite substantially, and so does equity research from IB. So for me, like, I was fairly certain I wanted to get into IB. To be fair, I started out my journey in due diligence. It just brought me closer to the aspect of learning how to think through financial statements, right? Like, and based on some of my interactions with these investors, what I ended up doing was started to pick up some of the skills that you need. So you need to know how to build a financial model that is going to be common between an equity research analyst job as well as an IB analyst job. But whereas an ER guy would typically end up focusing his or her day on tracking market movements, on tracking the news, on tracking results every 3 months whenever you've got a quarter end. Your job in IB is going to be a little bit different, right? You'll be focused on building a financial model for some part of your day. You'll be putting together IMs, teasers, pitches all of the time. So I think first what you probably want to do is like narrow down exactly what it is that you want to do, but at the very least try and learn how to build some financial models that is easily available. So you can opt for any courses. I think I've used the Macabacus. I've also mentioned that as one of the resources. There's some other paid programs that you can try. Speak to people who are already working at firms. And if you think that you cannot find a position in an MNC or something right away, probably start out with a domestic fund, right? Or sorry, domestic IB, and work up your way from there. That's exactly the way I went about doing it. So I can speak from experience.
Great, thanks, Shikha. Puja is also a CA. Would you like to add something?
Yeah, so I wasn't working at an IB, but I was working at a startup. But I was okay to work for an angel investor freelance without knowing that he's going to start a fund, because whatever little beginnings, at least I was getting exposure to that field. So I think you should be a little open to that, because maybe not a full time, but a few of these funds do open up internship opportunities. To get into that is not very difficult if you have good research skills, or like Shikha mentioned, if you have done some of these financial modeling courses. I think that is a good preparation set ready in your resume to at least get some internship opportunities. I think if you really want to get into this space, you should, and you're a fresher. So I think, I don't know personally, but if you're a fresher and there's not much kind of pressure on you to kind of be a breadwinner or anything like that, I think you should dabble with these few things and should be open to internship, because it is a little difficult to get into this field. And like Hetal mentioned correctly, people do ask for experience, and how does one get, it's like a challenge, a chicken and egg. So I think internships could be a good start.
Definitely. Shruti, you've raised your hand. Would you like to go ahead and ask your question?
Yeah, maybe. So thanks for taking my question. A quick background is that I have 2 years of post-MBA experience in corporate finance and investor relations. and I've been trying to look at some opportunities in the PEVC space. I gave an interview or two as an entry-level analyst at some of these firms, and a common question that I have faced and I think struggled with to kind of impress the interviewer was, tell me about a sector. A sector is still fine, but tell me about a company that you're interested to invest in, and what are the things that you look at. So while I know that there are certain good companies and it's a universe of companies out there, right? So because I'm not an insider, I do not have access to the private information that's in there. I'm really struggling to kind of make that impression that this is how I understand this company is, and this is why this is going to grow out there, and therefore express that I have some kind of understanding of how to go about analyzing an investment. So maybe some light on how do you guys see that? And I mentioned my background because I think Puja was talking about looking at internships as well. So at the moment, I'm not open to those, and therefore looking at full-time opportunities, which is why I mean, so yeah, that's largely my question here. So how do I build that thing and put it across?
So I'll take that. I think Puja also wants to do it, so I'll just keep it short. So I think when an interviewer, and this question has, I'm sure all of us would have been asked this question. So usually when an interviewer is asking you this question, they're trying to understand your interest, okay, in analyzing companies, in having an opinion on certain sectors and all those things. And B, they're trying to see that if you have an opinion, are you able to kind of back it up with some data or some information that is available. So you don't necessarily have to take a company that is private. You can have a public company in your mind, and all public companies will have a lot of data. So you can read your annual reports. You can look through their IPO prospectus. You can look through their investment presentations. You can look through broker reports, right? So all these resources are great because A, they provide you with hard data, and B, they also provide you with opinions of other people, and then you can sort of, base your opinion on these factors. So that's one thing. If you are interviewing, say, for a VC or a PE, more often than not, they'll ask you for a sector that is going through some sort of private equity, investment phase, or for private or some private company, right? So I think the best way to tackle such questions is to read some of the resources that are available on the internet. And I would recommend Your Story. I would recommend the Ken. I would recommend ET Prime. I think these are some of the good sources. There are some other open stack sources that you can go and do some Google searching. And so all of these, or you can go through some DRHPs and prospectus of some companies that are about to go public. So that way you will have some idea of what the company is, what they are doing, and some information, right? So you can base your opinion on those factors. So I think those are the two ways you can sort of answer these questions. So I think that is my input on this.
Thanks. Just maybe a follow-up to that. Are there any resources out there, or sample investment memos, etc., which I can read through to understand what exactly is it that you guys put out there while analyzing investments? I understand it's all confidential, but if something out in the public is available, would be happy to read through those as well.
Yeah, I think there's some of the global funds have put out their investment memos. I think there is one for Spotify. I don't know if it's Bessemer or if it's I forget.
Think Bessemer has it, yeah.
Yeah, I think so. They have certain these investment memos that are out in the world, but I would still urge you to have your own opinion. Obviously see what things that they look at. They'll probably look at a thesis, they'll probably look at risks, they'll probably look at some mitigants to those risks, and they'll obviously look at market size and competition, right? So I think those are the 4 or 5 broad areas that you can look at when you analyze any company. But I think a few of these big ones have their IC memos online. So I'm sure if you Google search, you'll be able to find it.
Okay.
Thanks, Ashita. We'll take one last question because I'm cognizant of the time that we're a little over. So the last question is from Maria. For context, she's a finance major and currently working with a Big Four firm as an investment banking analyst. So she's a non-CA and she's asking if something like CFA is mandatory to break into top private equity firms.
Yeah, I think I can take that. So no, I would not say that. I don't think CFA is mandatory at all. Given that you're already in investment banking, what really matters is that how you present your experience in investment banking, and when you get a chance at an interview, and try to get on to deals, try to get on to live deals, because that really matters. And that's one of the reasons how you will get shortlisted into a PE or a VC. As everybody on the panel mentioned, know your resume and your deals inside out. What were the key strengths? What were the key strengths of the company? If it was a buy side or a sell side, what were the key drivers of the growth in the future? So know your deals. Try to get on a live deal. I know it's a little difficult to get on a live deal if you're in back-end investment banking, but you have to kind of make that effort to try and get on a live deal. And CFA definitely is not important. All that matters is your technical expertise and how you present your background to your advantage. You already have a background in finance, so I don't think you do not have expertise or knowledge in finance. So my answer would be, I know there's a lot of faff around CFA, but it's not a must-have for sure.
Actually, Shreya, I just want to take this because it's so fun. So I've given 2 levels of CFA, and let me tell you, it's an absolute waste of time and money. So I am just urging anyone who thinks, that it's a way to enter into PVC. It's not. So just don't even bother if your goal is to, get into a private equity VC role. I think it's better, as Shreya said, to enter, to get into a live execution and then, take it from there. CFA is an absolute waste in no uncertain terms. I can tell you that. So yeah.
She has done 2 levels of CFA, so she is quite qualified enough to comment on that.
I'm a CFA myself, so I agree.
Okay. Okay, great. I know, Hetal, you have some other questions. If I think maybe someone from the panel can answer it on chat. I think Paro is answering it as well. I think we're over time already, so we'll move on to the feedback poll, and right after the feedback poll we'll run the wheel of names again for the lucky draw. So stay tuned, guys. Trina, over to you.
Okay, guys, so let's run the wheel of names again. So we'll do 2 rounds of it, starting. Okay, we have Vidula with us. Hey, Vidula, can you say hi?
Congratulations.
Hello.
Hello. Hi, Vidula. Congrats.
Thank you.
Okay, just stay tuned with us. We'll just have present a set of instructions like how to proceed next. Again, the last wheel of names. Oh. So, okay, we need to run it again. Shruti, it's the lucky day for Shruti, I think.
Yeah.
Oh. Okay, Sishita. Congrats, Sishita and Vidula. Okay, just announcing the names of the winners again. Many congratulations to them. Shruti, Niravi Sharma, Vidula, and Ishita Suri. Congratulations.
Thanks, Trina.
Thanks. May I request these 4 winners to just stay back for a couple of minutes, and Thank you, everyone. I will just hand over to Megha for the closing remarks. Thanks.
Hi, everyone. Thank you for such an interactive session, and congratulations to all the 4 winners. We really looking forward for the next session coming up, and we're gonna definitely look after the poll as well, the questions which has been collected. So thank you all the panelists for joining for today's session. And with this, we are requesting all the winners to stay back just for a few minutes. We're gonna share some instructions on a PPT, just one slide. Yeah, that's it.
Thank you.
Thank you.
Thank you.
Thanks. Bye.
Thanks, everyone.
Bye. Have a nice weekend. Thanks.
Bye.